So we're gonna see this. So that would be nice. We have quite a lot of stuff to discuss today, as you can imagine. And so, it's gonna be quite some action-packed day. Fantastic. We're live. Welcome to today's episode. You can listen in on Twitter. You can watch us live on YouTube. We have our brand new setup here in the Cake office. It's quite exciting, quite cool, and very much looking forward to see where this takes us. I hope the quality works. I hope the stream works. We're really testing this for the very first time, so at this very no guarantees yet. I hope everything is set up properly. I hope it works, and if not, then give us feedback, please. We're gonna work on this for next time to make sure that next time this definitely works even cleaner. It's absolute madness out there, I think. As always, we have our head of community here, Fabio. Before we dive in on what's happening out there and what's going on and the topics, give us a bit of a pulse. What's happening?
Yeah, to put it in the words of Stephen Strange, we are in the end game now. I think it's there's always, I don't know who said the quote, but if the biggest players in the industry tend to get in trouble, and we had seen that with FTX, second biggest exchange, I think, or third biggest, at least the top three. And now I think Genesis is in trouble. There's some news about Coinbase. Not that they're in actual trouble, but I think it's about their the debt that you can buy. And we've seen issues with GBTC, and all of them are very, very prominent players. And usually, if we're in a stage in a market stage where the big guys are getting into trouble, I think we're very close to a bottom. It doesn't feel like it. It feels like that we're going down forever. But I don't actually think that. So the sentiment in the community is, I don't know, there is this GIF or this meme where it's fine, and you see the dog sitting in a burning house. It does feel a little bit like that. Definitely astonishing times. Twitter is on fire with all the debates, with Elon being super active. I think they have a new all-time high in daily active users, and I can understand why. There's lots going on.
Yeah, it's to me not 100% clear actually on Twitter if that is really because of Twitter or if it's just because of all the happenings that's going on, obviously with crypto, FTX, now the World Cup. I mean, there was this meme on Twitter as well now that despite, I don't know, did you see that Spider-Man meme with that train that was running down and then Spider-Man was to hold that train and it was like Twitter servers right now, and I was like, yeah, I can totally see that.
I guess all the prominent accounts coming back could be something that has an impact as well. You know, like Babylon B, Andrew Tate, Jordan Peterson, discussions about Kanye West.
Yeah, Kanye,
yeah, Trump reinstated. I think he hasn't tweeted yet. Because
there's also those really. Did you see this funny tweet from Elon with Trump where this like one girl obviously is there and kind of like naked, and there's always like the Twitter logo in front, and then Trump basically there, like, oh my goodness, that so seductive.
Elon's meme game is definitely strong, and he's not shying away of being provocative. Of course, Trump has his own agenda. He owns his own social media that I think the main selling point was free speech, and now that Elon is bringing back free speech to Twitter, I guess he is in a tough position.
And full on. I still think like that thing about bringing that sync in, let that sink in. I thought, like, who comes up with that? I thought that was just really, really powerful. Yeah. Cool. Great topics for today. First, let's I think one quick thing to remind everyone on the Cake side. World Cup promotion. You can win a Bitcoin if you make all the right predictions. Go to cakedefi.com/world That's the promo that's running. Obviously, the things we had mentioned from last week are still applying. We have changed the lending format on our platform, where now this comes out of our budget. In return, the amounts this Friday are going to get changed. So yeah, we, for us, safety first. So I think that's absolutely key. And then, yeah, all the tools, all the services, you can see them on there. We have done the proof of reserves, all the transparency, and I really see a lot of people being very positive about this. So, yeah, really want to thank everyone for appreciating that, but also thank you everyone for trusting, because you can verify and yeah, sticking to us and staying with us. Um, yeah. What are other things that you see on the community Cake side before we go into the other topics?
Yeah, we briefly touched on that, like just a few minutes before coming into the call. So a lot of people, there is this movement where a lot of people are recommending putting all of your funds in cold storage. And Julian and me, we had a brief conversation about that, because there is pros and cons with cold storage. And I'm in full transparency, I'm going to say almost the same thing that I said to Julian ahead of this call. Is in my opinion, it's actually not that difficult to remember 24 words, to store them the right way. But with a lot of things, you need to work with a lot of attention and very careful, because a little mistake, just writing down the wrong word at the wrong place or confusing a letter or two, can lead to your funds being gone forever. And especially for people that are entering the space, that are new in the space, this can be very intimidating. And probably for a lot of users, especially if they are new, it could be a better solution to keep it with a trusted exchange. It depends a little bit on the amounts, of course, and what my personal philosophy is diversification. I don't want to have all of my funds on one ledger. So I use multiple ledgers. I don't want to have them all on one exchange. So I use multiples. And I guess a lot of people that have spent a lot of time in the space, they feel and act similar. This of course concerns all exchanges and all centralized platforms, because in times like these, when you see a very prominent player like FTX blowing up, there's a lot of questions that the community and customers have. And of course, us being a centralized and regulated entity, we also get these questions and people questioning if their funds are safe with us. The good thing there is that we acted very fast and careful. So like one of the steps that we took is we took all of our funds back home. So we're not dependent. We don't have any third-party risk. Or any counterparty risk at the moment, and we published our proof of reserves, so similar to Binance. And currently in community studies or in community polls, Binance actually performs very well, so people seem to have a lot of trust in Binance. I don't remember who made that poll, but I think Binance came in first with like 70% of the votes out of, I don't know, Coinbase, Kraken, and another exchange were listed on the poll as well. So this is definitely one of the most talked about topics currently.
Oh, yeah, for sure. I can completely believe that. Let's talk about three other things. Talk about, like, is this the end game? Is the next domino falling? What's happening here? I mean, we've discussed this a couple of times. Let's kind of reflect a bit on that. I want to reflect a bit on the past cycle. Is this worse? Is this the same? If you believe in the cycle theory, again, I'm always a bit skeptical of cycle theories, especially when times are very different. I expect to have different outcomes, but that doesn't mean that we shouldn't take a look there and kind of reflect there. And then, yeah, I think one other topic is, in my opinion, that this is going to be maybe not the last time that we're going to care much about the Fed, but maybe that's kind of the its importance is waning in this entire cycle. And tomorrow, Wednesday, is in the minutes update. So minutes release. So I think we should cover that a bit as well on the general market. So these are the 3 topics. Anything else from your side, Fabio, that you feel we need to bring up right now? Otherwise, we can just do it at the end. Yeah.
No, let's go with the points you suggested.
Great. Then let's dive in. I mean, we have seen obviously that entire thing around Genesis now. Yeah, maybe that next big kind of domino that's falling and all of that. The reason why this is quite scary, for those who know, Genesis is not the retail kind of part that you may know, like FTX, but it's super fundamental in everything from the institutional side. And a lot of companies used Genesis to deposit funds, and then they were a trading firm who would generate returns for you. Now, why is this so relevant? Well, obviously, because if they go bust, and there's a chance that they are bankrupt, right? Story out there in the street is that they are insolvent. They cannot, like, they're missing $1 billion, and it's not even that they're illiquid, they are insolvent. So the difference is illiquid means I have the fund on paper, but I cannot get them liquid right now. Insolvent means I owe you more than I actually have. And so word on the street is that Genesis Trading is insolvent, and they are looking for at least $1 billion to become solvent again. So where these funds are going to come from? And so this is where a complete different entity comes into place. And it's really interesting to understand that concept here. And that is the Digital Currency Group. And the Digital Currency Group invested in various entities, but especially Genesis, and then also the Grayscale Trust they're in full control over that. And so the key idea here, and again, I'm not saying this is going to happen, but it's the key idea, and you need to understand this key idea. And it's always important that you have to put probabilities to that. And I made this tweet thread on risk and likelihood and impact. And I honestly think that entire kind of rabbit hole right now, from all the FUD that's being thrown around, that sadly is the most likely FUD. And the idea here is Grayscale would at any point actually close that massive discount that's now getting close to 50%, and it actually decreased. And I'm going to explain to you why it actually could have decreased. But that massive discount of about 50% between spot and that trust, they are the only ones who could decrease that. And what I want to talk to you about is, why is there a discount in the first place, and how would this be decreased, and what would be what will be the incentives and all that. So let's explain that first of all. This trust of the Grayscale Bitcoin Trust is funded by anyone putting Bitcoin in there. So they started with some Bitcoin, but anyone can put Bitcoin in there. And after 6 months, you can sell the GBTC on the market. Why would anyone do that? Well, the reason you would do it is if there's a premium, and we have seen a premium all prior to May 2021, the advantage was you would, and that was a big business model that 3 Hours Capital did, and we had discussed this, that this was one of the big downfalls. Also Celsius, BlockFi, many lending companies did that. We at Cake DeFi never did that. For us, that was way too risky. But so you would borrow Bitcoin from customers, put them into the Grayscale Bitcoin Trust, wait 6 months, sell the GBTC, you pocket a premium, so you get more Bitcoins out. You pay the rewards to your customers, and you get a net profit. So that's how a lot of those Bitcoins came in. And the reason why there was a premium was because there was so much demand and very little GBTC, so there was just a premium. But because this was pretty much unlimited, how you could do this, and people just wanted to make their profit, and a lot of people, including myself, actually think that the run-up in 2020 and 2021 was actually driven a lot from Grayscale. So a lot of the run-up here came from there. But then at some point, this turned into a discount. And at the end, that was probably one of the reasons why BlockFi, 3 Hours Capital, probably also Alameda, all had these issues of liquidity later on. Obviously, Terra, Luna completely aggravated that, but that was a key part. But now this turned into a discount. And so now the question is, how would this discount get removed? Well, in order to remove that discount, you need some form of arbitrage. And the way this would work is, you would buy GBTC. At the moment, it's about $8,000 to buy one GBTC. So you invest $8,000. You claim this one BTC, so you can change the GBTC into BTC, and the only one who can do it is Grayscale, no one else. So in this case, Digital Currency Group. And then you sell that Bitcoin, and you sell it. I mean, at the moment, it's a bit lower than 16,000. So update the numbers. This is from like this morning, so the numbers changed slightly, but that the concept that works. And so you net the difference, and so that's $8,000. And then you rinse and repeat, and you use those profits to plug the hole in Genesis. And so you need to plug a hole of about $1 billion. Now, word on the street is you don't have to plug the full billion. A lot of investors out there saying they're willing to come in for 500 million if Grayscale plugs the other 500 million by themselves. Now, why is this relevant to understand? Well, the reason it's relevant to understand is because you're buying GBTC. So actually, GBTC goes up in price. And that's what you're seeing. You have seen actually GBTC go up in price. At the same time, because you are selling Bitcoin to get dollars again, you get actually Bitcoin go down. And that is why that discount is going down. That's why Bitcoin is going down. That's why the entire market is going down. And if you understand that part, you also understand why a Bitcoin ETF would have been quite dangerous. And we had discussed this actually last year in super great detail here on the show even. Because this entire effect would not only be able to be done by the Digital Currency Group, but by Grayscale, it would actually be able to be done by anyone. And so it would get an insane arbitrage, and there would be an insane selling pressure on Bitcoin. Now, the question is, why is this discount actually getting worse and worse and worse? Shouldn't it kind of be the same as, shouldn't it just kind of go down the same as regular Bitcoin? Well, the reason is there's a lot of institutional money in GBTC. And so obviously in Bitcoin, there's also institutional, but also retail. And a lot of the retailers, they're just hodling. I mean, sure, they can be very emotional. They can be very panicky. But in this case, institutionals are selling GBTC harder than Bitcoin. And so this discount gets worse and worse and worse. And so now in all of that, the big fear right now is that at the moment, no one is selling because they feel like selling. I mean, no one wants to voluntarily sell at these prices. This makes absolutely no sense. The only reason, or the biggest reason why people are selling is because they have to be selling. And so if you then think about who has to sell, it's actually only, to be honest, it's three types of people or three types of groups. It's those few retail investors that really need their Bitcoins right now. And for sure, there are some, don't get me wrong, but it's not the big selling pressure, right? I mean, it's not like suddenly like hordes of people that are now having to sell Bitcoin. So there will be some, but it will be a smaller group. The second group are the miners. And we looked at that, and every once in a while, we have those selling pressures. At the moment, it doesn't look like so much. So at the moment, it doesn't look like a lot of selling is coming from miners. The third group are those institutions that either are forced to liquidate, and we don't necessarily know anyone that has to liquidate right now. We know that probably there's going to be some liquidations happening by Mt. Gox in January, February. Maybe, I mean, this could also still change. Who knows, right? And we don't know the amounts and so on. And it could be that it's someone in the background. And so that someone in the background obviously could be, we don't know, could be Grayscale. And that could be an explanation on why we've seen this sell-off. Now, there is a second reason, which was over the weekend. A lot of ETH from the FTX hack started moving and started actually getting sold into REN BTC. And then that got mixed. And so that also caused the selling pressure. But right now, when you look at the numbers, you can actually see that a lot of selling is actually happening from Bitcoin. And very counterintuitive, the discount is not getting more. The discount is getting smaller to GBTC. And so that is a sign that someone is buying GBTC, but then someone is selling Bitcoin. Now, it doesn't necessarily mean that this is the same party. I'm not saying, but it's just weird. And so the reason why this gets very dangerous is because many times people believe they can calculate how far prices go down. And I see this on Twitter even, where people say, what's $500 million? I mean, the market trades tens of billions of dollars every single day. And so what's $500 million? Like that means nothing. That's like % of the entire kind of trading volume that Bitcoin has. And it's probably not so wrong, right? $500 million. I mean, if you have a $50 billion trading volume, $500 million would be 1%. So maybe it's not exactly 1%, maybe it's 2 or 3%. But who cares about 2 or 3%? The point, though, is these are very like in system theory, this is called a chaos system or a complex system. So it's very difficult to predict how much selling pressure leads to what kind of price. It's very difficult to analyze because you suddenly have a lot of these butterfly effects where one small thing can lead to a bigger one, lead to a bigger one, lead to a bigger one, and then maybe in the worst case, you suddenly have someone who gets liquidated and is forced to sell on top of it. And so that's just what a lot of people are getting scared of right now. And that's where a lot of these, very kind of fuddy and weird tweets happen from Paul Graham, who like said, there's something big happening this week. And then suddenly everyone jumped on top of this. Oh, there's something big happening this week. And then Vitalik also kind of trolled a bit there. And so obviously this is a dangerous situation. I just want to be very clear, but at the moment this is really only kind of speculation. I mean, the speculation here that the logical chain is sound, but obviously we don't know if that first domino was actually pushed, and so it's just something to kind of keep in mind here. That chain could definitely happen. We don't know if it has happened. Will it happen? We definitely know that Genesis has issues. We definitely know that. We definitely don't know how big those issues are. We don't know what status they're in the fundraising. I mean, rumor has it that they're raising at Wall Street. They asked Binance, and again, we don't know. So that's just the entire kind of idea. I don't know, Fabio, if you have points to add on top there, thoughts, things you hear. I think that would be helpful.
Yeah, I have much less technical insight and knowledge than you on these points. But what seems interesting for me to follow is how fast everything unwinds, and also the thing that is mind-boggling to me is how well the price holds up with all of that news coming in. Like, even when FTX news came out, I thought there has to be a bigger impact on price. And a lot of other news followed. So we got like the confirmation for BlockFi. Now there's Genesis. There's rumors about GBTC. There's so many rumors about Crypto.com. There were many other things that came out. And the coverage on Twitter was exceptional, like the Twitter Spaces and all of these news coming in live. And what is different than so I saw a news article, I don't remember, I think it was by Bloomberg, where they said this is crypto's Lehman Brothers moment. But the main difference between our space, between the crypto space and the traditional finance space, is that the markets cannot be halted. This is 24/7, 365. There is no player that is going to jump in and save us all. It's not that big that it is critical for the whole system. So the regulator or the government is not going to jump in and save an entity, and it's more like a little bit the Austrian way, which I think is actually good, that unhealthy players, over leveraged players, bad risk management, that they are actually getting cleaned out by burning down the forest. And you can really see the contagion, that everything is connected, the butterfly effect that you were touching on, that one thing leads to another, and it doesn't seem to stop. And I can foresee that maybe we already overreacted. I'm not sure if the market would have gone as low as it was right now, because we didn't have a blow off top. So I didn't expect the price, or a lot of people actually didn't expect the price to go below 20,000, but it did. And there were a lot of consequences that came with it. I feel that all of these things will play out a lot faster than most people anticipate. If you look at where we are from a time frame perspective, so if you compare this cycle or this bottom with other bottoms, we are in the end game. It's maybe a few weeks, maybe a month, but we are right about in the time frame where normally a bottom would happen. And I really feel we're not very much away from a real bottom. Can we drop lower? Yeah, of course. Can Genesis or some other big player blow up, and the consequences of that could take the price much lower? Yes. But I also feel if these things are sort of resolved and some confidence comes back, that the price is going to turn the other direction very, very fast. Like there is a few players like Bob Lucas, for example. He talks about what he calls a left translated cycle. So meaning we
You always end your terms.
yeah, there is like normally it's 3 years up, 1 year down. And what he says is the next cycle could be the other way around. So it's going to be an insane run up. So the market finds a bottom. There's going to be insane buying pressure, short squeeze, not a lot of supply, everybody jumping in, everybody front running. And then we have a long bear market afterwards. This is his theory. And I kind of can understand where he's coming from. And the one thing that I question a lot is I don't think that the next cycle, if we're still gonna have cycles, is gonna be similar to the ones we had, because so many people are anticipating the same thing, and markets are so intelligent and sophisticated. They're gonna front run and sniff out everything. They sniff out weakness, and they can turn on a dime. So I don't know. I feel very comfortable in my own strategy. I just buy and hold.
What do you think
And I
about
DCA.
Muhammad's question here? He says, Fabio, do you think now it's a good time to start dollar cost averaging Bitcoin, also altcoins for the long term?
Yes, of course, of course. I think it was a great time a month ago. I think it was a great time 2 months ago. Everything below the 200 weekly moving average is a great entry, and crypto is not dead. Bitcoin is not dead. This is it's going to recover. And if you have conviction, if you have a long time horizon, look, for me personally, the most important thing when I talk to my friends, when I talk to my families, have your personal finance in order. Have some fiat on the side, some US dollar, some euro, whatever the currencies you prefer, that you can cover your costs, that you, in the case of that you lose your job or the car breaks, the wash machine breaks, whatever, have some money on the side so you don't need to tap into your investments. If you have that figured out, if you have that solved, start investing, start dollar cost averaging, and start to buy assets that are in a discount. So yes, it's a great time to start dollar cost averaging. I already started 2 months ago, and I feel very comfortable buying at these prices. Yeah. What about you, Julian?
Yeah, I mean, I think dollar cost averaging right now makes a lot of sense. I think if you want to trade this right now and you're betting on this short-term price movement, which, I mean, I think sometimes people tend to say they want to invest for the long term, but then they are actually really just gambling on short-term price movement. I think I would be very cautious on being able to predict that because, again, we could easily see lower prices from here, right? But I also think long-term, yeah, I think this makes a lot of sense. And yeah, I agree with Fabio, with Fabrizio here. Obviously, if you're doing this via Cake DeFi to control your financial destiny, obviously that would be even better. So yeah, so I think that's key. Yeah, Muhammad says, thanks for the answer. Julian, I know you don't like commenting on altcoins, but you have a small position in Solana. The fundamentals didn't change. Maybe lifetime chance like 2018 ETH now. I actually sold a big part of my Solana with the FTX downfall. Not because I don't think that Solana cannot recover. It's really not. It's just that it's just so difficult for me to gauge anything there. And then you may be completely right that Solana has a 2008 ETH moment or even a 2016 ETH moment. And you may be completely right. To me, I didn't want to have that headache. And yeah, and so that was just the main reason. Yeah.
There, you can also look at, I call that a social indicator. So if I compare last October, last November to this year's, last October and last November, I got so many WhatsApp messages and Telegram messages, people talking for what should I buy? Which altcoin should I buy? Should I buy Bitcoin now? And how much should I buy? And where should I buy? And right now, the questions have completely turned around 180. The most frequent question is, should I sell? Is it still a good time to hodl? Should I start dollar cost averaging? The people don't feel comfortable because it feels devastating. The prices are low. If you go on Twitter, there is just bad news out there. and it's tough to make the decision to buy, to pull the trigger and to start buying. And it's even tougher if you buy and there is a dip of the dip. If you buy the dip and there is another dip.
Such an interesting graph here, right? If we go from like top to bottom in the past cycles, the first one took about 26 months. In 2018, it took 29 months. Right now, it took 30 months. So, yeah, just really, really interesting to kind of see that entire kind of cycle. Sorry, from halving to bottom. Sorry, halving to bottom, not top to bottom. From halving to bottom. And, yeah, just very, very interesting how that kind of cycle plays out. Now, I think Fabio and I disagree a bit there, or we kind of have different opinions. I'm a bit skeptical on this halving theory and cycle, like that we see cycles. I feel the way I see that people actually just try to twist the facts there is that they go and say, oh, it's lengthening, and then, oh, it's shortening, or it's lengthening. Like they always add something, right? So it's like there always comes, like it gets some astrology factor to it, right? So there's like some that's like, yeah, we have the cycle, but like suddenly, and then it adds something to it. But again, one thing I really want to recognize, and that's something that for me that hits really close to home for like a couple of reasons. But if we kind of go back 4 years, we had basically 2018, and we also had this really kind of like, just for reference, right? So that's not. I know this looks like 2022, but it's actually 2018. So we had this massive drop down. And so that was November 2018, really terrible month. And then this is a weekly chart, by the way. And then we found the bottom here in November, beginning of December. And the market then was really, really sideways. And it was actually the 2nd of April when we suddenly had this incredible candle, which was like 25% up in a single day. And I remember this really, really vividly for a very simple reason, because I was out there on my past company in January, and until I could deal with all the tokens and all the settlements that we had, it was like March-ish, and I had traded all those into Bitcoin actually in March. And so yeah, I remember that so vividly, because I think I had finished selling, I think it was like 29th of March or something, and then like really on the 2nd of April, yeah, this present came in and 25% pump up. So let's see. It's just, I mean, here history really kind of rhymes at the moment a bit. Obviously, we are at about, what, 4 times the prices? Yeah, 3 to 4 times the prices than we were back then. But just really, really curious to see that kind of, yeah, similar resemblance here. So, yeah, for me, and then Fabio, I want to hear a bit of your input here. I mean, I'm super skeptical of that cycle theory, just because I always, like when people talk about it, I mean, I see this right now from Plan B as well. Again, I've been very skeptical of the stock to flow model, and now it feels like there's always something he adds to it. And again, that's just a bit of my feeling. Same with the cycle theory. People always then have, it's lengthening or it's shortening or it's doing this, it's doing that. And to me, that's just always a bit of a tricky part. At the end, price is very simple to understand, very difficult to predict. It's all about supply and demand. So even the supply side of Bitcoin is very difficult to actually predict, because yes, you know the total number, but it's difficult to predict how much is circulating, how much is actually locked away, how much is lost. And then on the demand side, a lot of it happens on the economy. So for me, very, very difficult. But I want to be very clear, at the moment, it looks very rhymey, right? So yeah, it's... I do understand why people are saying we are, like, there seems, we seem to be finding a bottom here. So very, very interesting. I mean, look at those weekly channels, weekly candles here, right? We really dropped, that was from 6,000 to 4,000. So like a third down. It's very similar to what we've seen in November right now. So yeah, just quite curious. Fabio, what are your thoughts on that? I know here we disagree a bit, but that's absolutely fine. People should hear both kind of sides of the argument.
Yeah, yeah, and I'm going to make my point a little bit stronger, just to play devil's advocate. But I think stock to flow has definitely a valid point. Every model is destined to fail, and no model is perfect. But I feel stock to flow would have played out a lot better if there wouldn't have been as much paper Bitcoin. People didn't buy the real thing. People bought a product like GBTC. People bought leverage products. People bought paper Bitcoins. And so I feel it's fair to say that Bitcoin is actually not volatile. The people that trade it are. It's human psychology that is very volatile. And for the cycle theory, it's practically, in my opinion, like Firat mentioned this in a comment, it's a self-fulfilling prophecy. It's like technical analysis. People are looking at trend lines, people are looking at charts, looking at models, at theories, and because they are looking at it, they are valid. There is no model one to rule them all version that plays out perfectly. If there would be, we would all be filthy rich and it would be super easy, and it's not. But I feel definitely the halvings have a big impact because they affect the miners, and miners hold a shit ton of Bitcoin. And they are affected. So right now they are almost unprofitable, and it comes down to how they manage the risk and how they manage their finance and how much they need to unload to keep their operation going. So I feel the halvings definitely have an impact, and I still believe that 4-year cycles are more or less true. But I feel there is there are going to be it's going to be very different than people expect. So I'm more on the side of people like Bob Lucas that feel the cycles are going to change. They're not going to feel the same and behave the same. And I feel personally, this is my opinion, there's going to be a lot of front running in the next cycle because people expect like a little bit as a bigger version of what we saw in 2019. We had this one coin run up, the one that you mentioned, where we started with like a 20% pump in a day, and then we went to 14K. And this was pre-halvening. This was practically a front run of the halvening. And I can expect something like that if a majority thinks we have bottomed out and the risks decrease. I can see an immense run on Bitcoin, on crypto in general, that people are going to lose their minds. FOMO is going to kick in because the markets are so sophisticated. There's so much money on the sidelines. Big traders that said they are on the sidelines and left the markets completely. They are just waiting to come back in. There's so many sophisticated investors waiting for the market to bottom. And when they feel it is time, the capital is flowing, the floodgates are going to open. And I feel that the bottom will not be a boring, long, of course, until the moment the masses are confident that the bottom is built, it's probably going to be, most bottoms are actually boring bottoms, not violent, but boring. And I can foresee a boring time, maybe a few months of sideways actions that everybody loses interest, but there will be this one point where we have a strong candle, and from then on, it's going to the moon. And I don't know, everybody will be back on Twitter, and that's at least what I expect. And you need to kind of have some sort of plan or look, I'm not a trader, but I also kind of want to play the game. There is times when I dollar cost average a bit more. There is times when I sell fiat a bit more, or I hold a little bit more Bitcoin, or I hold a little bit more US dollars. So I'm leaning into a direction. I'm not trading, but I'm leaning. So in a bottom period, I want to buy more Bitcoin. I want a dollar cost average a bit harder. And when I feel the markets are exuberant, I want to lean out a little bit. I want to dollar cost average less or take a little bit of fiat out. I'm never going to leave the markets completely because I have long-term conviction, but I'm leaning in either one direction. And right now I'm leaning into buying. That's at least how I like or think.
And I mean, I agree with you. I mean, again, if history repeats here, right, we're gonna see December, January, February, March, very much of a sideways action. I think the key thing you want to see, right, and we haven't seen this at all this year, is you want to see a couple of weeks repeatedly slightly going up. So the key thing is really you don't want to see those massive kind of pumps, because during times like that, as right now, if you have those aggressive pumps, what's actually going to happen is people immediately sell them off because they're like, oh great, I can get out and I'm going to make an easy 15%. So what you want to see is you want to see the 2% up week, another 1.5% up week. So you want to have those these super small weeks up, like this concept of the boiling water with the frog, right? If the frog gets thrown into a boiling water jumps out. But then if the water goes up slightly, the frog doesn't notice it. And it's the same thing here. So you want to have that step-by-step kind of approach. And that would be really, really healthy. So whenever you have like a 15% pump day or something, that's something that I wouldn't trust. Unless there's really something fundamental. But if you don't understand why there's just a 15%, then it's probably going to get sold off as well. So I think that's key. One thing, if we talk about the demand side, right? I think one thing that's going to be definitely interesting, obviously, let's watch tomorrow. I mean, we are right here right now. Today's the 22nd, tomorrow's the 20th. We have the Fed meetings come out. It's going to be very interesting to see what's going to come out. I actually don't think we're going to see much surprise to what Jay Powell has already shared at the beginning of this month here on the 10th. So that's like almost 2 weeks ago now. The Fed is going to stay aggressive in their kind of communication. We're going to raise rates. We want to get to 5%. But however, they're going to like be a bit more cautious in a sense where they say, hey, we're going to watch the numbers. Here we're going to have another inflation number here on the 13th. Then on the 14th of December is the next meeting. So they're going to watch the 13th of December number. That's the November kind of inflation. We have seen October already dropping more than expected. So I think they're going to watch that. And market at the moment. So I do think actually those expectations that this was the last Fed rate hike was wrong. I do believe we're going to keep hiking. At the moment, the market is really pricing in 50 basis points. I actually do think we're going to see either. I think what would be really good would be a 25 basis point hike. I think if we see 25, I think that would be really, really strong. I think, to be honest, 0 would be very short-lived as exciting. I think 25 would be way better because that shows that the Fed says, hey, let's keep hiking rates. And let's be real. It's completely irrelevant if they hike 25 basis points or not. This means nothing, right? Then we're basically going from 4 to 4.25. That really means almost nothing to the market, but it signals that the Fed thinks, hey, that's really good. We are on a good track. And then I do think there's actually a chance that in February, where the market is expecting 50 basis points again, we may only see 25, maybe nothing. And that pause that the market expects after March may actually happen way earlier. Maybe it already happens in February. And then rate cuts could actually then start also way earlier already because inflation is going to drop relatively quickly, in my opinion, let's say in the summer. I'm expecting actually we're going to see way more drop end of this year, beginning of the year. So I'm definitely going to see there. So that's why the rates could be cut way faster. So and one thing I do want to highlight here, look at the stock prices, right? This is over the last months when crypto got slaughtered. Stocks are up 5 to 11%. So and that's in a month. That's super strong returns, right? So if crypto had just followed that, crypto would have been up like 25, 30%. I understand. This is not it's not Christmas here. Stuff has to happen, and FTX kind of didn't do that, but just really interesting to see. So again, my prediction all of that is I'm not expecting, and I think I said this 2 weeks ago already when FTX came out. I definitely said it last week, but I think I said it 2 weeks ago. I'm expecting much to happen until Christmas. It's Thanksgiving this week in the US, so general markets are going to be a bit more cautious, but I don't think crypto is going to do much until the end of the year. And then I think next year, actually, the Fed is going to become less and less important unless they actually do aggressive rate cuts, which I'm not expecting at the beginning of the year. I think the fundamental data is going to become important. It's going to be relevant how these companies are doing. It's going to be relevant to see how many employees are getting fired, what's the kind of consumer sentiment. So that's going to be the really key kind of things here. As a whole, from right now, I haven't changed much of my view. Next year is going to get very tricky because it's going to depend a lot on what the actual economy is going to do. So that's just where I'm standing in all that. I think, again, just to highlight, fantastic moments or fantastic opportunities to actually dollar cost average in. So I think that's really, really good. But don't expect this to be the day trading opportunities. Fabio, what are your thoughts?
Yeah, I guess we got the decoupling, just not the one that we wished for. We're not
the wrong way.
yeah, the wrong way. Everybody was expecting, okay, there will be a decoupling and crypto is going to pump and stocks are going to dump. So this decoupling from risk on assets, but yeah, it kind of played out the other way. And I guess, of course, this is due to the fundamental reasons that we had a few unhealthy players with leverage, with bad risk management, or just bad economic decisions. It's yeah, if gone to my head, somebody said, okay, you need to place a bet, when is the bottom going to be? I would definitely say within the next 6 months. It's not, maybe even a shorter period of time, maybe even this year. So when I would place a bet, and like, I'm not a trader and I'm not going to trade this, but for the next 5 months, I'm expecting that I'm going to dollar cost average a little bit harder than normal. I'm not gonna buy expensive things. I keep my fixed costs as low as possible, and I instead of saving in fiat, I'm gonna save mainly in Bitcoin. This is at least my plan. Nobody knows how everything is going to play out. But you can like slightly tweak the approach that we are having on all the Fed meetings and things that you shared. I 100% agree. Like, my bet would probably be 0.5% tomorrow, and probably that they're going to continue in that direction. And I don't know if this is going to have a big impact, as the last rate hikes or they also didn't really have an impact. It was the market already anticipated it beforehand, and on the actual day, of course, there was some volatility, but they didn't really impact us a lot. Yeah, but the most interesting thing is, besides crypto, maybe to briefly touch on other things, is I'm following Tesla a lot. I think it's a very interesting stock, and I want to buy some. I want to hold some because I believe in the future of the company. But I was strongly under the impression that it is extremely overvalued for a very, very long time. And I bought Tesla early, and I sold too early, way too early, which I kind of bite myself that I did that. And then I was just sitting on the sidelines, and I wished for lower prices. Now, if you look at a Tesla chart, they're kind of in the abyss area. So they broke previous support, and they're like in this nirvana space in between. How low they go, nobody knows. But there's other big tech players, like you mentioned, the firing or the people, the companies laying off people. Like, I think Facebook started it, Amazon followed it, and probably there will be a lot of other companies that will follow suit. And there might be big opportunities in big tech coming up, because big tech was overvalued for, I don't know, 5, 6, 7 years. And maybe we will finally get some good entries there. I'm not sure what kind of stocks or things are you currently following, Julian?
Yeah, I mean, at the moment, I haven't actually allocated much into individual stocks. I'm very broad, S&P 500. Yeah, just kind of staying diversified. I think I shared this a couple of times in the past. So when you're not 100% sure about what's happening, then try to play less alpha, try to be a bit play more beta, diversify more. In the various asset classes, be less aggressive. So that means in stocks, don't take individual bets, take safe indices. If you're in crypto, take the more boring kind of bets. That's also why, I mean, on the company portfolio, we only invest in Bitcoin and in Ethereum. In my personal portfolio, I mainly invest in Ethereum and in DeFi chain. And so these are things I know well, these I understand well, right? I don't, in precious metals, I don't like play around with a lot of the smaller metals. I go for gold. And so on, right? And so you want to, and you can be super aggressive. Like, obviously the tide's going to change, and we're going to see a hype market. And during the hype market, you actually want to be aggressively in those pumpy altcoins because they're gonna do really well during these times. But obviously the key is you need to have the jump off time, right? And I always feel like if someone says, hey, I'm only investing in Bitcoin because to me Bitcoin has the lowest amount of risk. It's like if crypto goes up, Bitcoin will definitely go up. I'm definitely not going to miss the train. There's not really anything that can go wrong in Bitcoin, and that wouldn't affect the entire market. And so that's why I'm mostly in Bitcoin. And I actually understand that argument. To me, that's a really reasonable argument. With that argument, I think you would have to expect that you're probably not going to make the biggest return. You're okay with that. I think that investment thesis is absolutely smart. And so I made a video yesterday on my personal channel in how you can get more than 10%, sometimes even 30% right now on Bitcoin Cashflow. Yeah, without having to give up your private key. But obviously, if you don't want to do this yourself, you can just do this on our platform as well. Yeah, and I think this makes a lot of sense. So, yeah, it's just my thoughts on that.
100%. I guess it's funny because when I talk with a lot of my friends, they consider me a conservative investor. But of course, a lot of my friends and also within the company, we have a lot of people that are deeply rooted in this industry. And our industry, there's a reason why you call them DeFi degens, because the risk appetite of people here in the space is enormous. And you can outperform almost everybody if you spend a lot of time and research. And also, like with the video that Julian mentioned, there's so many opportunities in the DeFi sector where you can get exceptional yields. The difference between certain investors, or why some investors call me conservative, is because I tried not to be wrong. Like we talked previously about these things. So I hold a lot of gold. And gold doesn't perform that well. It's not really an asset that grows your wealth, but it's also not an asset that you're losing a lot. And I personally prefer not to lose. So I hold a big percentage of my portfolio in gold because it balances out Bitcoin really, really well. Because Bitcoin is very volatile and gold is not. And my personal strategy is I reallocate once a year, every time on 31/12. And I try to keep the percentages in that same area, like 75/25 or so, gold, Bitcoin. And for me, until now, it worked very well. It doesn't work as well on the up cycles because I lose a lot because other people outperform me. But it works extremely well on the down cycles because last year I sold, I reallocated. So my gold position was 25%. It was more than 50% just a few weeks ago. So while other people lost a lot, I kind of went, I made a zero round with gold, but also then you had 10% inflation, which especially here in the Eurozone. So there is different strategies. I know for a fact we have a lot of people within our community. They played this year super aggressive. They went into yield farming products and they were liquidity mining stocks, and they did, like, there is a lot of people within our community, they actually gained this year 30, 40, 50%. They were increasing their net worth by a lot because they know what they're doing. They were holding the right pool pairs. They were making right decisions, swifting their net worth back and forth, real degens. And I personally, like, I work a lot, so I don't have the time to be a great degen on the side. But there are people that had a great year this year. It's definitely possible.
Yeah, you're right there. I think that's honestly a good point to end here. Let's see. Let's hope next week we're gonna have an update that goes. We're seeing a turnaround. Yeah, nothing happened with Genesis. That would be great. Not one domino after the next one. So let's hope there's one domino that keeps standing. So everyone, appreciate it. Thanks for the time. Thanks for coming in. If you haven't done so already, sign up at cakedefi.com. Get cash from your crypto. Check out the World Cup promotion. Also, if you are looking for a great company to work for, take a look. cakedefi.com/jobs. Apply, and then we're gonna have a lot of fun together. So yeah, on the Twitter space, thanks so much for tuning in. On the podcast, thanks for listening. On YouTube, thanks for watching. Click subscribe, like, and share. And then I'll see you next time together with Fabio. All the best. Thank you. Bye bye.